Welcome to the Safe Wheel live stream where I share my P&L on 3 accounts and teach my proprietary Safe Wheel for free and trade it live right in front of you. Please type in the chat that you can hear me okay. I want to make sure that my audio is working. And also be sure to post any questions you might have. Post them earlier rather than later so I can get to them before the end of the broadcast. Okay, so I want to get into, first of all, let me make sure my audio can hear clear. Thank you, ATTK. Appreciate that you let me know that you guys can hear me okay. Trading, thank you. Okay, so I'm going to first get into the earnings edge and what happened last week. Basically, what happened was I traded Tesla, TSLA, and it was a, I don't know, smaller than normal loss, I guess I could say. Let's see here. Let's look at the spreadsheet. So minus $242. The record since my last update, 11, 11, and 3. So had a couple losses in a row that made this kind of a 50% win rate, but you can see my average win, 973, average loss, 451. And with the earnings edge in 2022, did a 63% return versus the S&P down 19. And then in 2023, you can see it's being outperformed, up 6%, where the S&P is up 17.5. But overall, since I started trading this system live with a live account in January of 2022, it's up 73.4%. The S&P is down 5.3% since January of 2022. So even though the S&P is up significantly so far this year, my takeaway there is that it's still down since the end of 2021. Okay, next, the Premier Level 5. Let's look at that account. You'll notice that I'm showing my net liquidation. You don't see that anywhere else that I know. Well, there's a couple people you see it from, which is, actually one that I can think of, but that's just lately, like it just started coming around maybe 6 months or a year ago. So I hope that I've influenced others to share their P&L or their net liquidation. But a lot of the big names, people you would know, they don't share this. Okay, let's take a look at what we're doing with this account here. This is a Premier Level 5. I only trade the Premier Level 5 with this account. It looks like 34,885. 34,885 is the number. So my record is 18 wins, 6 losses, 6 break evens. I have 4 open trades right now with this system. And with this system, I only trade, on average once every 10 days. Don't spend a lot of time on it. I started it on April 8th because I designed it in early 2022 and got comfortable and backtested everything. So I didn't start right on January of 2022. I started on April 8th. And since then, it's up 12.2, or that was in 2022. It was up 12.2. The S&P was down 6.39 from April 8th to the end of the year. And then in 2023, we're up 3.6%. We're getting outperformed here, 17.5. But overall, since the beginning of 2022, Premier Level 5 is outperforming 16.28 versus 10. And of course, you can see the largest drawdowns, approximately 5% with the PL5. And the S&P since January 2022 was down 24%. So vastly outperforming, not only on overall performance, but on a risk-adjusted basis. All right. So let's now get into the safe wheel. Let me put that number into the spreadsheet first. 6327. Let's see how that's doing. $63.27. We can see vastly outperformed in 2022, 21% minus 19, and then this year up about 4% versus 17. So underperforming as far as returns, but the drawdowns on this account, this one's probably about 5% also, very similar to the Premier Level 5. This year, probably about half the drawdowns. So still being underperformed on a risk adjusted basis, but not overall since 2022. Since the beginning and since I started trading this live, this thing is vastly outperforming, up 26% versus minus 5% for the S&P. And you can see that the drawdowns are probably about 1/4 or 1/5. So just vastly outperforming the S&P 500, not only on a overall performance or overall percentage, but also on a risk adjusted basis, just vastly outperforming. And that's my goal with this system, to outperform the S&P 500. And that's my goal with this system, to outperform the S&P 500. My goal with this system is to try to turn a small account into a large account. So you're going to see some drawdowns on this one, but it's doing quite well, up 73%. Okay, so let's get into the safe wheel. Trading DKNG. Okay, now you'll notice here something different than normal. You can see that I already have my long call. Long call's already been set in. Rather than doing it on Mondays, I decided to do it on Fridays. So when I get out of this long call on Friday, I'm either going to take some profits or it's going to expire worthless. And I'm going to go ahead and buy my long call for the following week. That gives me protection over the weekend. I'm protecting this hedge. All right. So what's the first thing we do here? First thing we do is we take a look at the put hedge. We want to make sure our hedge is doing what it's supposed to do. It needs to be not under 100 days because the depreciation will be too fast. So if this is going to depreciate within 100 days, it would be depreciating too fast, and the hedge itself would be counterproductive to the premium that I'm selling. But it is above 100, so that qualifies. Now we want to make sure that this strike price, this $20 put, is close enough, within 70%, of the price of DKNG, and it might not be. So we're at 31.41, so I'm going to take my calculator here. 31.41 times 0.7%, 21. So it needs to be at $22, and it's only at 20. So I'm going to have to change this this put hedge. I'm going to have to roll it up. Now, when I change this put hedge, if I'm not long any shares, I can technically get out of this. I can start over and use a different underlying, which I'm not going to do. But I could start my whole trade over. But what I'm going to do is figure out where I need to put that put hedge. So 31.41 times 80%, it needs to be about that 25 or 26 level. So I'm going to roll that in to there. So let's go to the position. I'm going to roll it actually out to 150. I want to get closer to 150. So I'm going to roll this to the, see, I don't have the 2750. I might take the 2750 if I had that. So the 25 is going to be close enough. So I'm going to roll it to the 25 for December 15th. So I kind of have to remember that. Let's see here. So I go here. I'm going to right click here, create rolling order. So I am going to sell this, and I'm going to go into December 15th. And I'm going to go to the 25. Looks like it's going to cost me about $110. Let me make sure that December 15th. Yeah, the 25. That's the one I'm going to hold. I'm going to go to. I need to move my put hedge. And I might as well trade both of them at the same time. That way I kind of get a better deal. So what am I going to pay? I'll try to pay less. I'll just work this order. Let's see, maybe this might fill. I don't know. Might need a little dollar more or something. See? Okay, yeah. All right, so now I've got a closer strike price to the price of my underlying within about 80%, and I have 151 days. So I move that put hedge. Now that my put hedge is in order, it's time to trade, in essence, the traditional wheel. I don't own any shares, so I'm not writing a covered call. I'm going to sell a put. And I'm going to do that in the nearest expiration cycle. And I want to be out of the money. So 31.27. So 31 would be out of the money. And I'm kind of instilling a new rule. So what I'm going to find here is that if I'm just going to go with the one that's furthest out of the money for right now and not really talk about that rule per se. So 31.18, I can get over $31. I can't get over $31 here. So this doesn't qualify, but I can get it here. So I'm going to go here. I'm going to do one. It's like 41. I'm going to do one because I have between $5,000 and $10,000. So when I have between $5,000 and $10,000, I have this properly sized where I do one of these and I do 3 put hedges. Okay, so that went up $41. I already have my long call, right? Because I do that on Fridays now. So I sold $42 worth of premium against the depreciation for the hedge. So I'm going to sell more premium than what my hedge is costing me. But then also, really when this thing makes some money is when you get assigned and then you sell covered calls out of the money and then you make up the difference between what your assigned price and what the stock sells for on your strike price that you sell on a covered call. That's kind of where the money is made in this system. Sometimes it can be made if the underlying goes down significantly and this put hedge overpowers your long shares. That's another way that the system really makes money. Or during time, as time goes by and we keep selling premium against this hedge, eventually this makes more money than how much the hedge depreciates. But that's kind of a slower aspect of it. Okay, so that is the safe wheel. Do me a favor, hit that like button right now. It'll help other people learn this system. And I think when you have an instructor that shares their net liquidation, that's really where people need to be. I think you guys agree with that too. So really the only way to get them here is to hit that like button. Now, let's see here. Let me get into any questions or comments. I appreciate you guys say you can hear me. Kevin, good morning from Lakeland in Florida. ATTK, let's see what you have here. The PL5 and Safe Whale have big numbers for Vega. So, positive Vega, I'm assuming? No, negative Vega. So the Premier Level 5 has some negative Vega. Let's take a look at so this is interesting because I don't look at the safe wheel. I don't look at the Greeks. I've never really analyzed the Greeks from the safe wheel. So it's interesting to take a look at that. So it looks like it's got positive Vega. But the Premier Level 5 has a negative Vega. So why are you not worried about it? Okay, so we have to talk about one at a time. The Premier Level 5, I'm not worried about the negative Vega because I have Theta and because I am eventually hedged. So I have more long puts than I do short puts. So if there's a crash, I'm hedged. Now, if there's a grind down, I have certain techniques that I use to hedge. But if I were to just trade one structure with the Premier Level 5 and I had negative Vega, I would be concerned about short-term blips in volatility. Now with the with the safe wheel and positive vega. So if the volatility rises, it has a positive effect. But I don't look at that. I look at it. This is more of a percentage game. Everything's based on percentages. And I like to get assigned and then sell cover calls and then get called away from my stock. That is where the profits are mostly made with the system. So it doesn't have anything really to do. Well, I'm not going to make any adjustments based on the Greeks. So I don't look at the Greeks because they don't affect what I'm going to do. Now with the Premier Level 5, I do look at the Greeks. They do affect what I do. So why are we not worried about it is because weighted vega is not as high because of the different expirations of contracts. So weighted vega, I'm not worried about weighted vega with this system. Again, vega doesn't come into play too much uh, with this safe wheel. The Premier Level 5 weighted vega does come into play, and I look at the Greeks and I adjust things based on the Greeks, and I do have weighted vega. I do take that into consideration. So I'm assuming because you're talking about different expirations of the contracts. Yeah, so okay, so let's talk about that with the safe wheel. Yes, so weighted vega is uh, not as high. So in other words, the amount of the volatility does not affect my put hedge as much as it does affect the near term, which is kind of not a good thing, right? I'd rather have it have a more of an effect on my hedge. But I'm just going to outweigh that with having more puts or short 300 shares compared to only being short 100 or 200 shares. So I'm going to take the vega aspect of things out of it because of the amount of shares that I'm trading. I'm going to let the minus 300 overpower the positive 100 or positive 200 shares. And so the vega becomes a lot less of a factor, but it is a factor. And I would prefer that the weighted vega was more in my favor, because it's definitely not in my favor when you talk about this particular system, if that makes sense. Okay, less is more. Buying the long call on Friday, don't you run the risk of having to close it if you can't get premium on the short put, and therefore making a different decision? So let me think about that. So if I buy it on Friday, to run the risk of having to close it if I can't get premium on the short put. Oh, yeah. Okay. So you're saying, what if I, for example, maybe the way I'm interpreting this, what if I decided to change underlyings? Then I bought that call on Friday and kind of wasted that $5. I think that's what you're saying. And it's only $5. So that's kind of the reason why I'm not too worried about that aspect of it. If that's your question. If not, rephrase that. But yeah, it's only $5. So I'm not worried about it. That's probably that's probably the answer to your question. ATTK. I didn't say positive or negative for a reason. Oh, okay. But I hope I answered your question about how um, weighted vega comes into play with the safe wheel. And the answer, I think, to your question is weighted vega does work against me with the safe wheel, but then the overall position does have positive. Well, I'd have to look at it from a weighted vega standpoint. Thanks for the discussion. Very helpful. Okay, good. You're welcome. And that's what I was thinking. Thanks. Okay, good. So I did answer your question. Good question there. I like it when people kind of pick my brain, because I'm not really a natural person that kind of knows what people want to hear and then says things in certain ways to make people understand. I'm more like, just pick my brain and we'll go from there kind of guy. Okay, I don't see any more questions, so nothing more there. All right, so I'm going to get ready to end the broadcast. I always like to say, If the P&L is not real, what else are they trying to conceal? All right, I'll be back next week. We'll see you guys next week.